Welcome to the Action Playbook. I'm Jason Fox.
And I'm Coach Robin.
And we're helping leaders take action in life and business. Action Playbook.
Episode number...
I want to say 9.
I want to say you're right.
Good. When I was writing it there, I was like, was the last one 8? Because we're doing 3 here. We're going back to back to back. So you're like looking at us. Yes, we have been home and showered last night. These are fresh clothes for today. And we're just recording them so that we can get more action throughout the week. So we're doing this on the Saturdays. So it's on time for you guys.
Yeah, we could actually just get like a podcast uniform and just have the same outfit on every time. Is that a thing?
He's such a Steve Jobs, this guy. All he wants to talk is, I'm going to be like Apple.
It's just efficient, Jason. It's efficiency.
It is efficient. But today, we're not here to talk about our clothing. We're here to talk about cash flow.
Yay! Exciting. Love it.
Why is it so exciting? Because no one understands where it's gone.
Yeah. It's this really interesting thing I come across a lot is probably from a financial aspect, one of the most misunderstood or confusing aspects of management accounting.
Yep. Why is there profit in my profit and loss, but there's nothing in my bank account?
That's the question I get asked the most as a business coach.
No, look, $100,000. It says I've made $100,000, but I'm $20,000 in overdraft.
In the red. Yeah.
Yeah.
So we're gonna try and debunk some of that today.
Okay.
Demystify that today.
Give it a go. Hopefully you can keep up.
Yeah.
Hopefully I can keep up.
Yeah, and you're the expert here, so
throw that word around pretty loosely, don't you? Expert. Okay.
Not something you've been accused of often then?
I thought you were swearing at me. I was like, hang on a minute, what's this word?
Oh, okay. All right. Well, let's see how we go.
Okay. So profit and loss. So you look at a profit and loss, it's got a whole lot of income at the top, hopefully. And then there's a whole lot of lines underneath it. Cost of sales, cost of goods sold, a whole lot of lines. And that's all the money going back out of the business. And at the bottom, there's a net profit.
Yeah.
That net profit essentially is what you're going to pay tax on. You may have paid yourself wages. You may be taking drawings. So if you're trying to take $10,000 a month and it says it's $80,000 net profit, you're going to be 40 grand backwards straight away before paying tax. You've taken all that money.
Yeah, just to quickly simplify that, with a profit and loss, you've got your income streams, so the money that comes into your business. So that's directly as a result of what you've invoiced out, right? It's often called turnover or revenue, sales, income, but ultimately it just comes down to what have you invoiced.
Yep. Which is a paper transaction.
Yep. And then there's 2 types of expenses after that. The first one is your cost of sales. So what is directly attributed to those invoices that you've just created. Mm-hmm. Yeah. And then ultimately you end up with the rest of your expenses, which are your operational expenses. Those are your things like rent, insurance. So those are not directly attributed to that sale. The attributed to that sale would be, what materials you've used. Maybe there's labor that becomes part of the cost of sale if you're selling your services. And then the operational expenses are what you need to keep the business operating, like insurance, rent, fuel, all that sort of stuff.
Yep. Security, cleaning, blah, 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 blah. Yep. Okay.
And then ultimately the net result of that is either your profit or loss, and that's where the name comes from, your P&L, your profit and loss statement.
Correct. So when you look at your profit and loss, and we've just invoiced out, what are we now, May? So you've finished your April, you've invoiced everything out, and you say, cool, we've earned $30,000, but you look in your account and it says 0.
Your bank account?
Yeah. Scary. Oh, hang on a minute. I've just sent these invoices out. They're not due to be paid till the 20th. There's a discrepancy straight away.
Yeah.
That's a real easy one, isn't it?
And what do we call that, Jason?
I don't know. You're the coach. You tell me.
Not expecting that's called a cash gap.
Oh, yes.
So the cash gap is exactly what you explained there. So you buy something, let's say you're importing it from overseas. You've got to pay for it in advance. The stuff lands, you then have to go out and sell it, right? 30 days later or the 20th of the next month, you get paid. But in the meantime, like 60 days might have passed.
Sure.
That's a cash gap. That's where you've carried the cost of those goods before you've been paid for it.
Correct.
And that very often creates a cash flow crisis in a business.
Yeah, it's often 50 days, assuming you're getting paid on the 20th. What if people drag you out for 60, 90 days?
Yep.
That profit sitting back there from March may not be actually getting paid till July or August.
Yeah.
That could be a problem for your cash flow.
Yeah, exactly. And what else? What else can...
Oh, you could brought a whole lot of stock that you're not selling. So all your money's tied up on these discounted Pepsis you brought, but everyone's buying Coca-Cola off your shelves, but you're like, nah, eventually I'll get $3 for these Pepsis, and they've all cost you $1, and there's all this money tied up where maybe if you just sold them for $1, you could bring that money back into your business.
Yeah. Another one, of course, is buying assets. So that doesn't go into your P&L.
Now we're talking about sexy stuff.
Oh, the sexy stuff. Yeah, the trucks, the cars, the boats.
Oh, a boat would be nice.
Yeah, put it through your business.
They're probably going cheap going into winter. If you need to finance one, 021-369.
Or check the comments after this podcast. I mean, assets is a big one.
Sure.
Because it doesn't come into the P&L, so it doesn't reflect anywhere unless there's interest on a loan on a vehicle, for example.
Yep.
The interest will come in there. I don't want to confuse things, but assets don't actually go onto the P&L. So, you buy a car for $30,000, let's say you pay it cash, that's $30,000 straight out of your cash flow.
That's right.
Immediately. But,
But your profit and loss doesn't change. It still shows you've made $100,000, but now you got $30,000 gone.
Exactly.
Bang, you're down to $70,000 left, assuming it's all come in.
Another one I see quite often is drawings. Owner's drawings.
Because it's so easy to take that money when it's sitting there and take all of it, because who wants to calculate how much tax you're going to pay at the end of the year? We'll just take all that money. Family holiday. Oh, we've had a good month. Family holiday. How good.
Yeah. So drawings in a financial context is really like going to the till and taking money out the till, right? There's cash out. And what people, it's the way it's supposed to work is that drawing should be offset against money that you've put into the business, so capital that's been introduced or funds that have been introduced into the business, and then you can draw against that until that loan is repaid. It's exactly what it is. You've loaned the money to the business, and then you take it out as drawings. But if you're not tracking it, it can get out of hand real quick, right? And it's very easy to put that stuff through as drawings.
Well, I don't know about your business, but my business doesn't earn the same amount of money every single month. So if in March I go, oh, this is brilliant, I just paid myself $20,000, I took $20,000 out of the business, and then April comes along and I've only earned $2,000 and my outgoings for the business are $7,000 as round numbers, and shit, now I'm putting money back into the business from that I've taken out the previous month. Anyone done that? I'm sure you have.
Yeah, we know.
I'm sure you have.
Oh, you have.
Yeah. So, that's drawings. So, in Xero, I can't speak for MYOB because if you're using that, give yourself an uppercut. But in Xero, there's a little line and you can go accounts and there says profit and loss and it says balance sheet, but there's this cool tool that says cash flow summary. And you can click in the cash flow summary and go compare time, I think 12 months or 12 comparisons, whatever the wording is there, and it will show you essentially a profit and loss broken down for each month, but it actually shows the cash movements, the money in, the money out. So your balance sheet, your profit and loss, when it says net profit, may not have interest and depreciation in it, because a lot of the time that gets handled at the end of the year by your accountant. So in that net profit, it may not show that you've actually got 3 vehicle loans that are all $1,000 a week that are tipping out the bottom. But when you look at your cash summary, the money in and out of your accounts, you'll be able to see exactly where that money's going. You'll be able to see that actually we're down $5,000 this month. Our expenses were higher than our income, but the previous 2 months, it was the other way around. Fantastic tool. Great tool. Great way to look at seasonality in your business. and to forecast. If you're going to forecast and you just grab a profit and loss and go, oh, yep, divide that by 12 and that's what we cost, probably not accurate. Different work days throughout the, December, January, they're like 15-day work months, all the rest of it. But your cash flow summary will show those highs and lows.
Yeah, and if you don't have access to that cash summary for whatever reason, of course, your bank statement is the same, right?
Oh, yeah,
your bank statement tells you exactly what's moving in and out of your, from a cash point of view. Well, actually, it's not cash, is it? Nobody really does cash anymore.
Oh, is it called bank flow?
Why don't we call it bank flow? That's so much easier to understand, isn't it?
Well, it could be. I don't think anyone really uses that term, but you're going to coin it today. We're coining it today, bank flow, because you're not physically holding cash unless you own a bar or a coffee shop or something like that.
Yeah. But also bank flows makes it easy for me to understand, or certainly to explain, that is where your money goes in and out. That's where you can really track it. That's your scorecard.
Sure.
For money movement in the business. And I think just to touch on what you were talking about with the forecasting, it's one of the key things I do with my clients is to do a cash flow forecast together, where we can actually see, and you're 100% right, every business has those seasonal impacts. Very few businesses are going to be consistent every month, right?
Correct.
Where it becomes so predictable that you don't need to put it down on a spreadsheet. But if you take the time and you just do that spreadsheet and, you kind of predict what money's coming in, what money's going out, and you can see whether you're cash positive or cash negative with your net result, right?
Sure.
And that allows you time to respond before it becomes a crisis.
So you don't have to be reactive, you can be proactive.
You can be proactive,
Wow.
So if like December, January, those are typically bad cash flow months for a lot of businesses.
I've heard that.
Yeah, and so I get my clients to, things that I talk to them about is, why don't you go and offer an early settlement discount if they pay, because...
Pay on time.
Well, not just on time, maybe to pay
early,
so that you've got that money sitting in the bank account to get you through those rough 2 months.
Because we know, sorry, the admin girl's on Christmas holiday, we haven't been able to pay that. And what that actually means is, we haven't been paid either, and we've had to pay all our staff's holidays, but there's no income coming in, so we're also in the shit.
That's exactly what you can read it.
Yeah. She'll be back on the 15th of April, though.
I didn't really do this, but I know that there are some people that do, right? Is that when they see the cash flows getting rough and they want to avoid their suppliers especially, they go take a holiday.
Oh, brilliant.
And then
just spend some money to save paying some other people some money.
No, but then the team is left in the office going, sorry, Jason's not here at the moment. We can't issue any payments without his approval. He'll be back in 2 weeks, and hopefully by then the cash flows come right.
And then their suppliers go, we're just going to put you on stop credit, and the whole business comes to a halt.
So how do we avoid that?
Forecasting, ensuring there's enough money aside, perhaps. So
Correct.
Pretty hard to know the performance of your business if you don't know the numbers, do we think?
It would be really good to know the numbers in advance, right?
Wouldn't it?
And then you can have the funding. And I would really encourage everybody out there listening or watching, go and have a look at and see what access to funding you have, in terms of maybe the bank overdraft. And what we're really talking about is bridging finance. Do you have the bridging finance, the operational finance in the business, a war chest maybe, that you can access to bridge the times when you can see on the forecast that your cash flow is going to get tight.
Sure.
And it's especially relevant right now with like looming recessions and things like that, where there's a lot of uncertainty. So knowing that you've got a war chest or access to funding that you can draw on or fall back onto if the need is there becomes really important to create that sustainability through these rough times and challenging times.
And, no one wants to lose good stuff. But if you are going through a little bit of a dip, letting someone go maybe now rather than 6 months' time could have a huge benefit to actually, or advantage to your business staying alive come the end of the year. Because you're carrying someone, but there's no work there for them because you feel sorry for them or whatever. No one wants to let someone go. That's a very hard conversation to have. But if you're forecasting, you understand that actually there are 2 or 3 people standing around with a thumb up their ass, and that's dragging our business to the ground. You know, sometimes having that conversation earlier can save you.
And that leaves me with, you know, a statement that I think I'm going to be using quite a bit on these podcasts is you can only improve numbers that you know.
Mm.
You know, so get out there, understand your numbers, know your numbers, go and look for those reports, go understand where the money is flowing in the, you know, from the bank statements that you can access. And as soon as you start to understand that exactly what you're talking about, you start to make smarter decisions because you understand what's happening in your business.
Mm. Yep, and you'll see that a lot of building companies and stuff at the moment laying people off left, right, and centre. That's to ensure that they're here in another 10 years' time.
It's preemptive. It's
Correct.
Preemptive measures that they're taking. Yeah. And unfortunately, you're right. You know, we don't want to get there, but sometimes it is necessary to take those steps, to be a little bit clinical about it.
Yeah.
You know, or alternatively, to make sure you've got a really healthy pipeline and your relationships with your clients are really good, so that there's no drop off in sales performance.
Sure. Yeah. And same, like if you can't pay one of your dealers or something, jump on the phone, let them know, hey, this is what's happening in our business right now, but I can have this cleared up over the next 3 months. I'll pay a 33 and a third 3 times. Hey, thanks for letting us know. We understand that. We'll carry on. Business as usual. Thank you.
Yeah.
Communication. Go back to the previous podcast.
Relationships, you know, I often see people fostering really strong relationships with clients, but just remember that that's only one part of the value chain. Having good, strong relationships with your suppliers gives you the opportunity to have those conversations at a time when you really need to.
Yeah.
And them understanding you, your business, why it is, where you're going, what's going to happen in the future, those all become part of that decision-making process when they're looking at, should I let him go or should I send a lawyer's letter? Correct.
And that was creditors too, not debtors, sorry. When we're talking about the cash flow too, we're probably going to have to do a finance podcast almost straight after this, because we're talking about cash flow and we're talking about fostering those communications with your banks, but a lot of people won't understand that there's far more options than just your banks. There's invoice factoring or debtor finance. There's other companies like Prosper and stuff that will raise capital pretty quickly for you. So yeah, there might be a whole other conversation around that. But if you're in a situation that you can see that your cash flow is dire, you need to do that conversation around funding before you start having reversals in your accounts and stuff like that, because they'll look at your bank statements, and if there's any of that, it's a no.
Proactivity is key.
So stay ahead of your numbers. Stay ahead of your numbers.
Get ahead of the curve.
Yep, it's a new financial year. You've just finished 2023. Run over it. Have a look at it. How's your sales volumes in the first couple of months of this year? What are you projecting? How's your business going to look? Is that cash flow? Is that enough of a rant?
I think that's enough for people to digest today.
Okay. Well, that's Cashflow 101 with Coach Robin.
And Jason.
All right. Well, what do you want to say? Get out there.
Get out there and take some action.
Thank you.